Bismillahir Rahmanir Rahim. Welcome again, guys. Hope everybody is fine and doing great. Last time we had discussion on a topic, Afghanistan tax compliance, and there was a great discussion on the Afghanistan types of taxes in Afghanistan. So we discussed different. There were like 6 types of taxes applicable in Afghanistan, out of which first 3 have been discussed: rental withholding tax, employee withholding tax, and contractor withholding tax. We also had discussion on how to calculate these taxes. Today we'll be having, as this is part 2 of chapter 7 or lecture 7, in this session we'll be discussing how to calculate the remaining 3 types of taxes, and later on we will discuss what does non-compliance mean, and when an entity is non-compliant, what will happen at Ministry of Finance. There are certain tax enforcement actions taken against that entity. So what do we do when a file or when an entity is introduced to the tax enforcement, how to plan and how to follow up with them. Also, there is a tax audit. Each entities are introduced to tax audit department on random basis once in a 5 year. So when an entity is introduced to audit, how to plan that and how to carry out those tax audits, what to do and what not to do. When the taxpayers are non-compliant, there are certain penalties as per the income tax law. We'll also have discussion on how to avoid those penalties and what are those different types of tax penalties and how to avoid them. At the end we'll have discussion on recommendations. So before we start discussion on our today's topic, which is dividend, interest, royalties, tax withholding, I would like to go through the previous lecture shortly. We have to do a correction in our previous calculation of the wage withholding tax. If you remember, last time we had discussion on how to calculate wage withholding tax of an employee whose salary is 125,000 Afghanis. So as you see, this salary passes through 4 thresholds. The first threshold is 0% tax, which is 5,000. The second threshold is 12,500, which is 2% tax. The third threshold is 100,000, which is subject to 10% tax, and above 100,000 is subject to 20% withholding tax. So first we had calculation on 5,000. You can see there is 0% tax. For example, I say 5,000 multiplied by 0%. The result is zero tax. Then if you see, this is the second threshold. So basically this threshold is up to 12,500. Up to 12,500, if you have a salary of up to 12,500, it's subject to 2%, except by deducting the 5,000, because 5,000 is not subject to tax. So we have to deduct 5,000 here. This 5,000 will be deducted from it, and the remaining will be subject to 2% tax. It's because 5,000 is already, like, there is 0% tax. It's tax exempt. So we have to deduct that exempt part. So basically, what we'll do, we'll write 12,500, and we'll minus 5,000, and the remaining is 7,500, and we'll calculate 2% tax on that. Okay, so that is 2%. So you can see 7,500 multiplied by 2%, and you have 150,000. Then here basically we had the error in this cell. We did not calculate it properly. What we have to do is, this is now the third threshold, which is up to 100,000 Afghani. You will have to withhold 10% tax. So how to calculate that? From this 100,000, we'll have to deduct 12,500, because 5,000 is tax exempt and 7,500 is subject to 2% tax. So we have to deduct both of them. So we know the remaining is subject to 10%. So we'll put here equals 100,000 minus 5,000 plus 7,500. You can do this way as well, or you can do this way as well. 100,000 minus 12,500. We deduct 12,500 because on this we have already calculated the tax. So out of 100,000 we will have to deduct 12,500, and on the remaining amount we'll calculate the 10% withholding tax. So the remaining amount is 87,500. Now this amount is subject to 10% withholding tax. Alright, so we'll calculate it by multiplying 87,500 with 10%. You'll get 8,750. This is the 10% withholding tax on 87,500. Now here, how to calculate this? This is above 100,000. So above 100,000, we'll do what? The total salary is this. We'll deduct 100,000 from this, because we know that we have already calculated the tax on 100,000 on 3 stages. Stage number 1, 0%. Stage number 2, 2%. Stage number 3, 10%. So we'll have to apply 20% withholding tax on the remaining above 100,000. So that is 25,000. Now let's make 25,000 subject to 20% tax. That is 5,000. Now we'll add up all these taxes and deduct it from the gross salary. This is your gross salary. So we'll have to deduct it from the gross salary. So let's add all of them. 0%, 0 tax, 150, 8,750, 8,750, and 5,000. Let's add all of these 4. What do we have? We have 13,900. This 13,900 is basically the wage withholding tax of an employee whose salary is 125,000. So this 13,900, this will be its wage withholding tax. It will be paid to Ministry of Finance, and the remaining amount, which is how much? 125,000 minus 13,900. The remaining is 111,100. This will be paid to the employee. So basically this will goes to employee's pocket, and this will go to Ministry of Finance account out of the total 125,000 gross salary. Now this salary will be reported as an expense in the company's account, right? So that was a minor correction that we did here in this threshold in stage 3, and now this is the proper and the correct tax of employee whose salary is 125,000 Afghanis, right? So this is how we calculate the wage withholding tax for our employees. Now let's go ahead and start the new topic. Okay, so the fourth tax applicable in Afghanistan is dividend withholding tax, interest withholding tax, royalties withholding tax. These three are put together because they have the same percentage of tax and it's under the same article. So when paying third party, not one of the previous withholding categories, and previous withholding categories were contractor withholding tax, wage withholding tax, rental withholding tax. If you are making a payment other than rental, other than salary, other than the normal expenses, I mean specifically if you are paying a dividend, if you are paying an interest, or if you are paying royalties, then you will have to apply 20% on the gross payment, right? We have to withhold 20% flat, and this is flat. There is no threshold like contractor withholding tax. This is 20% flat. Like rental withholding tax, this is 20% flat. Okay, so for example, you are paying a sum of money or an amount of money as an interest, as dividends, as royalties, as prizes, as rewards, as lottery, as gratuities or bonuses, whatever you are paying, right? Before making payment to anyone, to a third party, we are required to withhold 20% flat, right? This 20% will be remitted to the Ministry of Finance account, and the remaining net amount is going to be paid to the third party. Okay, while after making payment, by law we are required to withhold 20% before making the payment, and then once withheld, within 10 days after making payment, or at the end of the month, or 10 days in the following month, we will have to make a report to Ministry of Finance, also pay the withheld taxes to the Ministry of Finance, and report accordingly, right? So that's how we do dividend withholding tax. So for example, let's say we have announced a bonus to Ahmad. We are to pay a bonus of, suppose, 50,000. It's a bonus and we want to pay it to someone. So by law, before making this payment, we have to withhold 20% tax. So how to calculate that? Very easy. We'll say 50,000 multiplied by 20%, which is 10,000. Now what we'll do, we will deduct this 10,000 from the 50,000, right? We will deduct 10,000 from 50,000, which is 40,000. Now this 40,000 is paid to the party, right? And this is paid to Ministry of Finance is bonus withholding tax, or we can say or royalty withholding tax, or dividend withholding tax, right? Suppose this is what? This is suppose a price, right? So it's a price, 20,000 price. Okay, now we want to pay a 200,000 as what? As dividend. Dividend to someone. By law, before making this payment, we have to withhold 20% tax. How to calculate that? Multiply 200,000 by 20%, you will get the tax amount, right? So that's basically tax. This dividend withholding tax is paid to Ministry of Finance, and the remaining net amount we'll have to deduct it from we'll have to deduct 40,000 from 200,000. The remaining net amount is paid to the party. So that's how to calculate the dividend withholding tax, right? So that's all. So next is business receipt tax, or BRT. What is business receipt tax? Business receipts. By business receipts we mean gross income. So we can say tax on the gross receipts or gross income of the company, right? So basically here there are 4 categories. The first category is a tax exempt category. If a business organization has a tax exempt contract and its exemption or exempt status is confirmed by the Ministry of Finance, like Ministry of Finance has allowed him and accepted that contract to be the tax exempt, then there is no business receipt tax, or we can say BRT. Right, that's the first category. The second category is there are like 3 or 4 sectors whose revenue is subject to 10% business receipt tax, and that is flat. Telecom sector, all the companies or all the businesses working in the telecom sector, their gross income is subject to 10% flat BRT, and this is quarterly tax. Means after 3 months, telecom companies are required to calculate their gross revenue or gross receipts or gross income, and then apply 10% flat, and then pay that tax to Ministry of Finance within 15 days in the next quarter, right? For example, January, February and March, we will have to add the revenue, the gross income of on accrual basis of all these 3 months, and then apply 10% tax, and then within 15 days of the April we'll have to pay it to Ministry of Finance and also report our revenue. Each quarter, on quarterly basis, basically we report our revenue by paying business receipt tax or tax on gross income to the Ministry of Finance. This tax on our gross income is as expense. It is our expense, tax expense, and then we claim it as an expense in our income statement, right? Also in our annual income tax return. Also, airlines and all the companies working in aviation sector or airline sector, they are also subject to 10% gross income tax or business receipt tax, which is quarterly and it's flat. We have restaurants, hospitals, restaurants, hotels. These 3 categories are also businesses working in these 3 sectors: hospital sector, restaurant sector, hotel sector. They are also required to pay 10% flat on their gross income on quarterly basis, report the revenue to Minister of Finance and pay the tax as well. So but one thing we have to remember here, and which is very important, all those 5-star, 3 to 5-star restaurants, hotels and hospitals, their revenue gross income, gross revenue is subject to 10% flat. If a restaurant is not a 5-star restaurant, if a guest house, if a hotel, it's not a hotel, it's a guest house, but this guest house is not a 5-star, then they are not subject to 10%, they are subject to 5% withholding tax. So here the third category is hospitality revenue of less than 7,500 per quarter. Here this third category, by hospitality we mean here restaurants, guest house and hotels. All those restaurants, hotels and guest houses which are not 5-star or less than 5-star or less than 3-star, and their revenue is usually below 7,500, they are required to pay only 5% per quarter as a business receipt tax, and report their revenue on quarterly basis to Ministry of Finance by paying 5% tax. Other than telecom companies, aviation or airline companies, hospitals, restaurants, hotels and guest houses, other than these 6 sectors, all the companies working in the other sectors, they are subject to 4% BRT on quarterly basis, right? So these are 4 categories here. Category number 1 is 0%, category number 2 is 10%, category number 3 is 5%, and category number 4 is 4%, right? So other than these 6 sectors, the remaining sectors or businesses, they are subject to 4% BRT on quarterly basis. All right, let's do a calculation. For example, we are a telecom sector company and our revenue is 50 million, right? Let's say, how much is that? Okay, right, 500 million. So that's our revenue for this quarter, and we are a telecom sector company, so we are subject to how much? 10% tax, BRT tax, right? BRT. That's our quarterly gross income, right? So for example, this is the first quarter. This is the first quarter, for example, of 2021. In our first quarter, we had 500 million revenue. So by law, as we are a telecom sector company, we are required to pay 10% business receipt tax. So how to calculate 10% business receipt tax? We'll have to multiply 500 million with 10%. We have 50 million. So this 50 million is our what? It's our BRT, right? So now what we'll do, we'll have to pay this amount to Ministry of Finance within 15 days of the next quarter, and report our revenue as well. There is a specific tax return which is called BRT form. We'll have to fill that. We'll say this is our income and this is our BRT, and we'll verify that from the Ministry of Finance at the end of each quarter, right? suppose we are a small restaurant and our income is 500,000 for the quarter. By law, we are subject to pay 5% BRT. So let's calculate how much is 5% of 500,000. Multiply by 5%. So 25,000. We'll have to pay 25,000 per quarter and report our revenue as well. Suppose we are a business, for example, we are a consulting business, right? And our revenue for the quarter is 20 million, right? 20 million. So by law, we are required to pay 4% because we are neither a telecom sector, nor hospitality, nor airlines or aviation. We are other than those 6 categories that I earlier mentioned. So that's why we are required to pay only 4% BRT. So let's calculate. Multiply 20 million by 4%. We will add 800,000. We'll have to pay this to Ministry of Finance and report our revenue as well. So that's how we can calculate the business receipt tax, looking at the nature of our income and the category of the BRT as per the income tax law of Afghanistan, right? Okay, that's all about the business receipt tax. Remember that business receipt tax is calculated and paid to Ministry of Finance on quarterly basis, or to the tax office on quarterly basis. It's basically the reporting of your gross income and tax. So it means that we are on monthly basis we report our expenses to Ministry of Finance, and on quarterly basis we report our revenue to Ministry of Finance. Also, while reporting expenses, we report withholding tax. We pay we remit the withholding tax and also report to Ministry of Finance or the tax office. And on quarterly basis, we report our revenue and also pay the gross receipt tax or business receipt tax. The sixth one is annual income tax. So annual income tax is basically the we can say the income tax. Annual income tax, it's the 20% flat for all types of profits that you generate within the country. For this we have 2 categories. The first category is a tax exempt category. As previously discussed, if you are exempt from paying BRT, you are also exempt from paying, then you'll also be exempt from paying the annual income tax return. Here it's important that the exemption status should be confirmed by the Ministry of Finance, and you have been allowed tax exemption, then you are not required to pay the tax. But this does not mean that you are exempt from reporting, whether if it's a quarterly reporting or if it's an annual reporting. If you are exempt, even then you'll have to report your revenue by saying that I'm exempt, but this is my revenue. If you are not exempt, then you will have to pay certain tax, as I mentioned earlier, on quarterly basis, and on annual basis we'll have to pay 20%. So income tax in Afghanistan is 20%, and remember that this 20% is not considered expense in Afghanistan. The only tax which is considered as an expense in Afghanistan is the business receipt tax or gross income tax, right? So by law we have 3 months to calculate all our revenues, expenses, do financials, review and analysis, and within 3 months of the next year, For example, it's 2020 has already finished, so until March we have time now here to calculate all our revenues and do prepare our income statement, prepare our balance sheet, prepare our financial statements, close our books, for example, journal and ledger and trial balance, and then prepare our financial statements. Once financial statements are prepared, then we are required to prepare our annual income tax return, which is basically specialized, specially designed 4-page tax return, where a list of expenses given, then a list of revenues is given, then there is a tax calculation, tax assessment, and then there is a information sheet. So basically there are 4 sheets. The first sheet is information sheet, the second sheet is tax calculation sheet, the third sheet is a revenue or income sheet, the fourth sheet is expense sheet, and then we have a separate sheet for the balance sheet with the annual income tax return. So within 3 months we'll have to calculate all the expenses and revenues and all that. Then we calculate our net income, and from the net income we'll have to pay 20%. So all revenues minus all expenses, then we have net income, which is called taxable income. Then calculate 20% tax, pay the tax, and then there is profit after tax, and this profit after tax is transferred to the balance sheet of the year, right? So that's how we do, and it's very easy. Whatever the net income is, just multiply it by 20%, you will get the tax amount. Pay the tax amount, deduct the tax amount from the net profit, you will have the profit after tax, which you can then distribute among the dividend holders or shareholders, or you can add it to the retained earning, or transfer it to the profit of the year in the balance sheet portion, right? So that's all about the tax in Afghanistan. Now, what does non-compliance mean? First of all, let's talk about what does compliance mean. Compliance means that you are reporting your rent expense, salary expense, and other expenses on monthly basis, along with you are withholding from the relevant parties and reporting to the Ministry of Finance, also paying the taxes on people's behalf. Also, you are paying your quarterly tax, which is gross income tax or business receipt tax, also reporting your revenue within the given days, within the due dates. So the rental withholding tax had 15 days, the wage and vendor and dividend and all those withholding taxes had 10 days. Business receipt tax had 15 days, and annual income tax had 3 months. So when an entity is reporting on a monthly, quarterly, and annual basis, doing withholding, paying its taxes, but within the deadlines given in the law, this entity is called a tax compliant entity, right? But if an entity is not reporting within the due dates given in the law on monthly, quarterly, and annual basis, that company is called a non-compliant company. And by non-compliance, we mean failure to pay the due tax by the due date prescribed by the provisions of this law, failure to maintain, provide access to books and record of business transactions. For example, if tax office want to be given access to your books of accounts and to your business records and transactions, and you are denying, you are not providing them access, so you are non-compliant. Or failure to file a tax return and balance sheet, failure to withhold tax, failure to pay tax without reasonable cause, failure to obtain a tax identification number. So if you are doing one of these sex activities, or other than these sex activities with an intention of evading payment of tax, this becomes a tax compliance, right? All right. So when you are non-compliant, right? If an entity is non-compliant, they'll face certain types of penalties in Afghanistan, right? Either self-assessed penalty, or then audit department will assess the penalties. So as per the article 100, before it was like 1%, now it's 0.1%, now it's 0.05%, right? Before it was 0.1%, now it has become 0.05%. As per the Article 100 of the income tax law. It's of the tax due per day payments late. For example, if you have withheld 10,000 as withholding tax, and you fail to pay within the due date, then on each day delay, you as an entity are required to pay 0.1% or 0.05% late payment penalty is per day. If you fail to pay, you are 5 days late, then you will multiply it by 5. If you are 10 days late, then you will multiply by 10, right? Article 101, it says 220,000 Afghanis, which is for approximately $4,400 for poor records. If you have not maintained proper records, then the Ministry of Finance will charge you 20,000 Afghani for not maintaining the proper record. Article 102 says 500 Afghani, which is $10 per day, late filing annual returns. Now it has also changed. Article 103 will also discuss the new penalties in the upcoming slide. So let's first discuss the previous ones. Most of them have changed, either have increased or either they have decreased. Article 103 says 10% of the tax due for not withholding tax. For example, we were supposed to withhold tax from our employees, but we have not withheld tax. For example, the tax which should have been withheld from our employee is 25,000, but we have not withheld that tax. Ministry of Finance will not only charge 25,000 from us, but also they will charge 0.01% on per day late payment, and also 10% of 25,000 is a penalty of not withholding, right? And then we have Article 104. It says 10% of the tax due within the reasonable cause. Okay, without the reasonable cause. Okay, then we have Article 105. It says 20,000 Afghanis for not obtaining TIN. If we have not obtained TIN, we don't have a TIN, or we have not obtained the TIN for our employees, for ourselves, then the Ministry of Finance will charge us 20,000 Afghanis as a penalty. Article 106 say that you will be referred to Attorney General's office for disclosure of confidential material or misuse position for direct or indirect benefit. For example, if you have misused the law So then you will be introduced to Attorney General's office for further pursuit. It's also a big penalty. Article 98, 2 times the tax due for tax evasion. Look, there are two terms used in the taxation. One is tax avoidance and the second one is tax evasion. Tax avoidance is not an offense, it's allowed. Tax avoidance is that you plan properly to reduce your tax. But tax evasion is an offense. It means that you hide things, you not properly calculate. For example, you hide your revenue, you hide your expenses, or you increase your expenses, you decrease your revenue by doing unfair means. This becomes an evasion. When Ministry of Finance finds you doing tax evasion, then they put on you a capital punishment, and capital punishment is like 2 times of 2 times of the tax due. For example, if you were to pay 20,000 Afghanis as annual income, then if you come under this tax evasion, then you will have to pay 60,000. 20,000 will be multiplied by 2 times, so it's 60,000. So if you have, for example, 100,000 income, before you paid only 20,000, 80,000 was in your pocket. Now after they find that you have avoided, they will take 60%, 60,000 out of your pocket. You will have remaining 40,000. So that's why we have to avoid tax evasion. Now let's talk about the new tax rates. Additional taxes, Article 34 to 44. There are some additional taxes as well. It has changed to 5%, 0.05%. 500 changed. 500 was changed to 100 Afghani per day for entities, and 30 Afghani per day for individuals or sole proprietorship businesses. Okay, this 10% remains the same. This 20,000 also remains the same, but 50,000, 5,000 becomes for individual businesses, or we can say for sole proprietorship businesses. This is also 10%. It's the new penalty applied. This is also new penalty applied. 200 Afghani per day for failure to provide information by a set due date and notice of the Ministry of Finance. And 100 is for sole proprietorship businesses. 25% of the tax shortfall. That's also a new penalty. 2 times the evaded tax. That's the same. This is also a new. 20,000 has reduced, and 5,000 is for individuals. That's also new. For failure to obtain VAT registration certificate, VAT is going to be applicable in Afghanistan in upcoming years. It will basically replace the business receipt tax. 4,000 Afghani for falsely use of VAT registration. That's also new. And 25,000 of the shortfall fails to issue incorrect VAT administration. That's also new. As I earlier mentioned, VAT is not applicable fully till now. So when it's applicable, these 3 different VAT related penalties will also apply. This is number 4, 40,000 Afghani for other VAT non-compliance. So that's in the future. These 4 types of penalties will be applicable in the future. Now, when you are non-compliant, not only you will pay those penalties, but also you will be introduced to tax enforcement department, which is within the Ministry of Finance or within the tax office, and it's as per the Article 16 to Article 18. Ministry of Finance can collect unpaid tax from third parties if collection from wages cannot deduct more than 20% of wages. Third party may petition the Ministry of Finance for a change in the amount due date the Ministry of the MOF requested. If third party does not comply, they will be held personally liable for payment. So that's the articles regarding tax collection. Means that, for example, your landlord is not agreeing with you to pay the tax. For example, he is not allowing you to withhold 10% or 15% from the rent amount. Then you will have to notify the Ministry of Finance. Then the Ministry of Finance will take that person liable personally. If you have not informed Ministry of Finance, then you are, as an entity, you are liable to pay those taxes. Tax enforcement, it's Article 20 to Article 24. For failure to file a tax return or pay tax by the due date, Minister of Finance can suspend taxpayers' financial accounts. These are tax enforcement actions from 1 to 7. If you are not complying, not only you will end up paying those penalties, but also the Ministry of Finance or the tax office will take these enforcement actions. Number 1, suspend your financial account, suspend importation of the goods, or export and import, means they will suspend your business. Forcibly affects a sign stating closed temporary for non-compliant. Yeah, they will close your businesses for 10 days. Like they will give you a notice that to make you compliant. If you are not compliant, then they will come and they will seal your businesses for 10 days, and then for 30 days, and then afterwards, if still you are not compliant, they'll permanently seal your business. And also there is a possibility of including the names of the employees and the owners of the business in the no exit list. Also there is a possibility of imprisonment. And also number 7, the Ministry of Finance can hold the control of your business and property, and they can sell it out to cash their taxes. So it's a very critical situation. Well, you don't have to let situations go till this till this worst scenarios. Other enforcement actions: freezing of bank accounts, and auctioning your assets and all that. Personal liability of key staff. For example, they will take your key staff, and they will impose the business liability to the personal liability of the key staff. Persons not allowed to leave Afghanistan, as I earlier mentioned. No exit list. Business will be closed. Restriction on disposal of the property. Prosecution and prison sentence. So these are the other enforcement actions as per the Article 92, 93, 94, 95 and 96. Okay, what to do when tax audit starts? So I said that randomly within 5 years an entity is once introduced to the tax enforcement office. Basically, tax enforcement office, tax audit department is basically, they are the ones who decide your final tax liability, right? As I said, Afghanistan has a self-reporting system. When you self-report your taxes and income and expenses, then tax audit department, they further investigate all those reporting and see if you have properly reported, like truly and fairly or not. So what we have to do, we have to identify the assigned team. Then we have to request a written list of documents, what they require from you. They usually issue questionnaires or list of documents to you. Then you will have to provide those. Carefully gather all the documents that have been provided and prepare all documents that are being requested. Do your own calculations to compare against the draft audit assessment. Pay final agreed assessment to obtain audit clearance. Do not make illegal payments. This is a crime under Afghanistan Anti-Corruption Law, US FCPA, and UK Anti-Bribery Act, and the other international laws. Right? Okay. What we'll have to do when you are introduced to tax enforcement, the first thing you have to do is quickly go and meet with the tax enforcement officials and assure them for your compliant. Right? Identify the assigned enforcement team members and final assessment being enforced. Immediately send acknowledgement letter and assure full cooperation. Clearly understand all the deadlines. Discuss an advanced tax payment percentage against the audit assessment. Now, as per the tax administration law, once you are introduced to the tax enforcement, they will not return your case or file back to the audit or the case management unless you pay a certain amount of tax to show that you are compliant, and that could be 1 to 30% of the assessed tax. Discuss an advanced tax payment. Here I added the point. Discuss a payment plan if needed and obtain appropriate approvals. If you cannot pay the percentage or the amount that the tax office is demanding from you to show you're compliant, then whatever amount that you want to pay, you will have to confirm it from the top management or the administration of the Ministry of Finance. That could be DG Revenue, that could be Deputy Minister. Make initial payments to return to audit department. Once payments are approved, you'll have to share the payment slips and all that with the audit department or with the concerned department from where you have been introduced to tax enforcement and enforcement. So to make sure that they also know that you are in compliant or you are cooperating with the tax enforcement. Okay. What are recommendations? Plan and budget for all withholding taxes in advance. Keep excellent accounting process and records. Complete clear self-assessment from start date. Timely monthly, quarterly, and annual filings. Keep signed copies of all communication provided and received. Constant communication with the case managers, audit department, and enforcement department. These three are the key departments within the tax office. An entity will have, as a business entity, will have to have a constant communication with all these three departments to update every thing that we need to report to Ministry of Finance. Right? So that's all about the types of taxes in Afghanistan, how to plan, how to do all that stuff. I know these two lectures are very lengthy, but are very important. So I hope you guys watch the videos, listen to it carefully again and again. If you have any questions, please come back to me in the comment or in my personal email. Thank you so much for being with me, and may God bless you all.